Welcome to Upticks. I'm Jake Falcon, the founder and CEO of Falcon Wealth Advisors, and I'm joined by my permanent host, Cory Bittner, the co-founder and CFO of Falcon Wealth Advisors. And we're thrilled to have you join us for another episode where we break down the latest market moves, economic headlines, and most importantly, what it all means for your financial plan. Now, Cory, before we dive in, I want to get clear on who our audience is. And at Falcon Wealth Advisors, we really cater to two types of individual investors. One would be people at or near retirement. So these are people approaching retirement or already retired. And we talk about financial topics that impact their financial plans. And then we've got a second set of clientele that are commonly referred to as Henrys. Henrys simply stand for high earners, not rich yet. So these are high income families, people that are making $300,000, $500,000, $1 million plus per year. Financial issues pertain to them as well that we talk about, the same or very similar to our high net worth retired clients. So with that, Cory, we're going to take it away. Job market jitters mount, Cory. So the job openings fell to 7.2 million in July, which is one of the lowest levels since the pandemic. And this missed expectations and it raised concerns about a cooling labor market. Cory, I think the unemployment number is right around 4.3% now. So I want to hear your opinion, but why this matters to our audience is that when you have a weaker job market, it can signal slower economic growth, which may impact corporate earnings and consumer spending, which ultimately could impact stock prices negatively. So Cory, what's your thought on this? What's your opinion? What should investors be looking at?
Yep. So you just talked about the July number. The August numbers have come out also, and we've seen more of the same in the month of August. And really interestingly, Jake, the revisions that were just made for 2024 were 900,000 jobs that were created in 2024 were basically revised downward. So basically half of the jobs that were created in 2024, it turns out, weren't actually created. So why all of this matters is, well, one, obviously what you just talked about, Jake, what it means for the market, but two, it seems a little crazy to me that these numbers and this data can be that flawed, that these numbers can be off so much. But I think that when we
hold on, are you one of these people that doesn't believe in the data that the government reports? Are you one of those people?
I am now, because I found out how wrong they've been about it. So,
But I
I
don't know
think
why.
it just raises, yeah.
Why would they report it wrong though? I mean, some of these people are conspiracy theorists, like, oh, you can't believe the data; it's wrong, it's fake, it's false. But like, okay, but then what is it? Then my point is, like, then why does the data even matter then? If you don't believe,
Good
and
question.
I'm not saying this to you specifically
Yeah.
necessarily, but if people don't believe the data is real, then are you suggesting we shouldn't even pay attention to it? Because some people will say, Cory, that the 4.3% unemployment rate, that's fake too.
Right. Oh, I agree.
So
I
going to
agree
your
with you that
point
people
though,
say
so
that.
you said, all right, so the data's changed, it's been revised.
Yes.
So what? So what's it matter to our audience?
So why it matters to our audience is that I think if you're making decisions in your own financial situation or in your own life based upon headlines, which really you shouldn't do in the first place, this is just proving, and this is just showing us that headlines are one thing, reality is another. And we have to plan for reality. That's the world that we live in. It's the world that our clients live in. And that's why you want to build a financial plan that holds up through different environments, but recognize that, what the headlines look like, the data can change. The facts ultimately can change. That's what we're seeing right now. But I find it very curious that the data can be so wrong. And I think that it just actually creates an environment where people do question things more, to your point, Jake.
Well,
And
here's the deal. It's it's a little backwards too, Cory, because if a company lays off people and the unemployment rate goes higher, that doesn't mean the stock market's going to go down, actually. Actually, a lot of times Wall Street celebrates that because it means that one of employers, like one of our biggest expenses at Falcon Wealth Advisors is our payroll. And not that we're looking to do this, but like when companies lay off people and they lower their payroll, a lot of time that money goes right down into the earnings, which makes their stock price actually go up. And so that's another point that I think I wanted to kind of, rein in on here, that you made a good point, is that headlines don't necessarily mean good or bad. Like, you don't really know how it's going to shake out. My deal is that you want to have a portfolio constructed of companies that you or your advisor understands, that you understand their story, you understand their leadership, you understand how they make money, and you understand that the good leadership hopefully will pivot despite the economic forecast. And so that's really what we're looking for, is leadership that can pivot regardless of interest rates or unemployment or whatever is out there. And so that's good. Do you have any other thoughts on this? You're getting a little fired up on me
we're
already.
living in interesting times. I'll leave it at that, right? I mean, I think we are, and that's probably always the case. But it is,
yeah, it's always been. I don't think it's. I think it's always interesting. I think people always say that like it's never been like this before. Of course, it's never been like this before. You know what? Today that we're recording this show, it's never been like this before. And you know what? Tomorrow,
and it'll never be.
There'll
like
never
this
be
again.
a tomorrow, today, and yesterday. So I get it. I am not one of these conspiracy theorists, though. The data is the data, and I take it with a grain of salt. To me, it's a ballpark figure. I don't zero in on these 100,000 revisions, 4.2 versus 4.3. I don't overreact to that. I actually pay more attention, Cory, to the trend line. Are things moving? Are they getting better? Or are they getting worse? And so the numbers would tell us that the jobs numbers are getting a little worse. But I'll tell you this: anything under 5% is still a very, very, very strong economy. So I'm actually not that worried about it at all. And I don't think our audience should be worried about it either. So,
okay. And I mean, that's also easy for us to say if somebody's looking for work, right? It's a different story.
Well,
right?
Well, yeah, that's not what we're talking about. We're talking about their portfolio today. And so, yes, absolutely. If you were one of these people that have been laid off and the job market is tighter, yeah, it's horrible. And I get that. That's a completely different conversation. And that's actually more of a reason to have a financial plan, is that if you are laid off, you need to meet with a wealth advisor and figure out, do you need to go back to work? If you need to go back to work, how much money do you need to make? How much money do you need to save? And look at all those things. So yeah, that's a different situation. And you're right. Thousands of people are impacted by this. So that's.
But it all points back to planning, exactly like
that's right. That's right. All right, Cory, kick us off with number 2 here. What do you got?
All right, Jake. So Google gets grace. So Alphabet shares climbed after a federal judge rejected the harshest penalties in Google's antitrust case. So while Google was found to hold an illegal monopoly, the remedies were limited to contract restrictions and data sharing requirements. So first off, why
hold on. I want you on the soapbox.
Go ahead.
I want you on the soapbox. So I'm kicking you off the soapbox today, Cory. I want to have more of a conversation than listen to you preach.
All right, let's do it.
So I'm curious.
I'll lean in.
Have a conversation with me today, Cory. I'm curious. Do you use any other search engine other than Google? Search. Nope. I'm not talking about AI. I'm talking about search.
No.
So do you think it's wrong for them to have a monopoly, though, if all the consumers are using it?
Yes. I mean, I think that's why there's antitrust monopoly legislation. Like it is.
But you have options. How come you don't use Bing?
Well, when I open the internet on my phone, it defaults to Google, to Chrome.
You could change that,
Mm-hmm. But Google has paid Apple a lot of money to make sure that that's the case.
But you could change that. It doesn't. You can default to Bing. What's the? I don't even know another.
Bing's not a better product. I mean, that's the main thing, right?
Bing is a better product.
I don't think it is. No. I don't.
So why does this matter? I was just curious because I'm the same. Like I agree. I agree that monopolies probably culturally aren't great. However, if everybody's using it, why does the government need to step in and bust them up? But it sounds like they diminish the penalty. Is that what you were getting at?
Yeah, exactly. And that was basically what this whole story was about, because I think it was last year is when they were found to, have an illegal monopoly. But one of the things that was on the table that is no longer on the table after this ruling recently was that Google may actually have to divest itself of Chrome, the browser itself. Like, was Google going to be forced to sell Chrome?
And they're not.
And they're not. And that's part of what's, helped the share price, frankly.
So who cares about this? Why does it matter to our audience?
So regulatory actions like this one do reshape the competitive landscape, especially for tech giants in the world that we're living in today. But I think for investors, less severe penalties around this can mean reduced risk of disruption to the way that Google does business, which can, ultimately it can help support the company's price stability and sector confidence. So
yeah, let's be clear here. This is not investment advice. So
correct.
We're not endorsing Google or Alphabet as the name of the stock. Like Cory's not saying to buy or sell or hold it. What it is telling, though, investors is that the regulators aren't going to create harsh headwinds for Google, which I find pretty interesting. So do you think that's their lobbying going on there, Cory?
Yes, I do. Yeah, I mean, there could be very meaningful constraints that could have been put in place because of the ruling around the monopoly. But actually, I won't go there. I'll say that for another show. But I think that it is.
Well, go ahead. What were you going to say?
Well, what I was going to. So my take for you around all of this, though, Jake, is which is aligned with the landscape world, is passive investing. So I think this is really interesting. So if you think about how many people and the rise of passive investing, people that just, there's basically these flows into people make contributions to their 401ks, passive investing. You just want to own the market. We know that the 10 biggest companies in the S&P 500, Google being one of them, have become almost 40% of the index. So what I find really interesting actually is that everyone who is blindly, passively investing all of their money are ultimately, those flows are making the biggest companies even bigger. When you think about what you're actually investing in, just recognizing that, again, 40% of the S&P 500 now is concentrated to 10 companies. And I think that the flows basically are just sort of rising to the top. And I think that's how much passive investing has distorted the market and has actually distorted investing in the first place. And if and when this flips, if and when there's a different administration, if and when they take a different stance on antitrust ruling, that could mean a lot for the market. So I think it's crucial that you know what you own and why you own it. And I would actually encourage people to resist the idea that you should just blindly, passively invest in the market and everything is going to work itself out.
Well, this is why people, you're right. I like that. Thank you for sharing that. That was good. And that wasn't preachy, Cory.
Okay, good.
Job.
Thank you.
So
I'm back on my soapbox now. Now I'll step down.
No, it wasn't soapboxy. So here's the deal, though. I agree with that because I wonder who's it? Jack Bogle that founded Vanguard. And I don't think, I would be curious what he would have to say. He's passed away, but I would be curious what he would have to say about that now, Cory, because I think when he started, he basically is the father of passive investing for our audience that doesn't know. Like he kind of created the index mutual fund. It was a mutual fund and he created it. I don't know when this was, maybe the 70s, maybe earlier. This has been around for a long time. But I'd be curious because I don't think that was an issue at that time. He was saying that the individual investor was messing up because they were speculating in individual stocks too much. But now it's like the pendulum, what you're getting at, has swung too far to the other side. Totally. And what drives me nuts is advisors that use passive index funds and charge their clients a fee. I mean, that's just stupid to me. Like,
explain your real value add there, Mr. Advisor.
Yeah, for any advisor to put you in an index fund and charge you a fee on top of the index fund fee is really dumb because you're taking a low cost product and turning it into a high cost product, and then nobody's managing it. It's passive, right. So it's really silly. But you're right, there is more risk here. And I think that's why people get nervous when they hear about the S&P 500 crashing. Whereas if you're working with an advisor who actually builds you a portfolio of individual stocks and bonds, yeah, the S&P is a broad indicator of kind of general market movements. But if you're not overexposed in those top heavy companies, you might not do as bad when the market crashes. Now, you might not do as well when those companies are skyrocketing either. So I think, and again, you and I are very, have strong conviction that it pays to know what you own and why you own it. And we like buying individual stocks and bonds for our clients. And that's why we can't take on every client, because a client has to have a certain amount of assets or net worth or investments to do that with us the right way. But I think it's very important. So I like that, Cory. Good one. Let's go on. Do you have anything else on this one?
No, we can move on. Thank you.
So yeah, good. So the next one is number 3 here. Talking about breakups. Kraft Heinz is breaking up their brand, and they're basically going to split into 2 companies, which is unwinding much of its 2015 mega merger. So it's so funny to me, Cory. This is like cable companies. When I was researching this, it's like, all these cable companies with our television was all bundled, and then they all broke up, and now they're looking at bundling again. So this is a similar thing, is that Kraft Heinz were 2 different companies. They had this huge merger over a decade, or around a decade ago, and now they're splitting back up. So I'm just curious. Well, first I'll talk about why this matters, but I want to get your opinion. So this matters to our clients because it can unlock shareholder value and improve operational efficiency. So it can be good from an investment standpoint. Again, this show is not investment advice, so please don't buy Kraft Heinz or whatever based on the show. You need to meet with your financial planner and talk about that first. But investors basically need to weigh, if they do own this or want to own this, they need to weigh which side will get better margins, which side could have stronger growth. Are there new investment opportunities in the food sector? So that's why investors would pay attention to this. But I want to get your opinion on the breakup, Cory. What are your thoughts on this?
Yeah. So first off, remember the game Uno?
Oh yeah, I'm
The
a
game
big
Uno,
fan.
right? So
I'm
the
not a
Uno
big fan
reverse
of Uno.
card.
I have Uno. I have Uno. I played it with Rachel probably 6 months ago. We need to play again. Do you have
So
Uno at home?
I think so. I think we do. I'm not sure, but the Uno reverse card, right? So
Yeah.
we just talked about Google. This is sort of like the Uno reverse card of that. Google is going to keep itself one big company because they can, and they are being allowed to do that. Kraft Heinz, on the other hand, the company is making this decision to actually split up in different parts. And I think a couple of weeks ago, maybe a month ago, we talked about Target and Ulta and a partnership that they had. Same idea here. Companies are adapting. What's interesting about Kraft Heinz is that this big mega merger was backed by Berkshire Hathaway. And I actually read
Yeah.
that, Warren Buffett had made a comment that he was disappointed that this was the direction that things needed to go. But at the end of the day, if something's not working, you need to make changes. And I think that that's what's happening here. And I think from an investment standpoint, it's good to recognize that. And we're not giving investment advice here, but we're talking about why companies are doing what they're doing. And I think that in this particular instance, sometimes if things don't work, if it's not working, if there's been a deterioration in the product and margins, like if you find yourself in a hole, you want to stop digging. And I think that's why the company is making the decision to do this. And I think that it ultimately is good for companies to adapt when things don't go the way that they expect.
Yeah, and let's be clear, this is here to stay. Companies are going to merge, they're going to break up. That's just
Totally.
part of, that's a cool thing about America, I would say, is that like the spirit of entrepreneurship and capitalism, like it allows for these opportunities where you might not get that somewhere else. And so I think it's a good thing, but the key here is if you're a do-it-yourselfer, you need to be aware of what's going on here is a real deal. And if you're working with an advisor and you've got questions, just ask, and we can go into the details here. All right, Cory, kick us off with the next one.
All right, court ruling roils rates. So Treasury yields jumped as a federal court struck down most of Trump era tariffs, raising the possibility of government repayments and straining the U.S. fiscal outlook. The day that this was announced, the Dow Jones index dropped over 500 points and yields on bonds moved higher. They surged across the world and in the United States. What do you think about this, Jake? I've got a lot of thoughts on this one. I want to hear what you think and why it matters.
Yeah, I know you basically disagree with what 99% of what Trump does, Cory. Not saying you don't like
you're
him.
going to hear an interesting take from me here. So go ahead. I want to hear yours first.
I was talking about this the other day. So basically, my opinion is, I think the tariffs need to be restructured. I don't agree with the way Trump kind of bullied his way into this. However, like we talked about last week, I'm also not a master negotiator. So I am confident. My best guess is that is his negotiating tactic. And frankly, one could argue that it worked pretty well. What is weird though is that I
disagree with that.
What is weird though, so he swung the bat and he started putting all these harsh tariffs, and now they're finding what he did wasn't legal, which is silly to me that he would do that knowing, I mean, some advisor to him would have said, hey, you can't do this. And he did it anyways. Now, what's interesting though is I think he did it and the country already started collecting these revenues, like you were just saying, and we might have to pay these back. So I think that's good and bad. I think it's good that he brought attention that it needed to change and he just did it. Now I think he's going to have to go through the political bureaucracy and do it the right way, which may water down what happened and actually may hurt the country more than help the country. So I don't know. I think he could have been more diplomatic about it and gone about it the right way the first time, because he's also, when he does this, yes, he's trying to make America great again. I mean, that's his agenda. However, when he does this, a lot of times though, he's wasting time and resources by doing this, because now all of these federal court judges or whoever's got to get involved has to go through all this stuff. And why didn't he just do it the right way to begin with? Is my argument. This is not pro or against Trump. It's just saying, like, I would have preferred, yes, maybe use your negotiating tactic, but also, yes, go through the right channels the first way so that you don't have to waste everybody else's time on this. What are your thoughts?
All right, so here's mine. So I've read a lot, obviously, about the tariffs this year, and the Trump administration knew that this could happen and has basically had backup plans and another backup plan around the tariffs. And there's a whole lot of legality involved, but they knew that this was a possibility, basically, when this whole thing rolled out in April. But I think, Jake, that after the One Big Beautiful Bill Act was signed and put into place, the tariff revenue needs to be there for the Treasury because they've lowered corporate tax rates. So there's less money coming into the Treasury that some of it was being replaced with revenue from the tariffs. So I think that without tariff revenue, the lower tax revenue that comes with the one big beautiful bill, it actually can create a worsening fiscal situation in our country. And I don't know if the One Big Beautiful Bill Act even really works without the revenue that tariffs generate. So for that reason, I think that, the president and his administration has backup plans. And in my opinion, the tariffs are going to be here to stay because they have to be, because of the fiscal situation.
Which I'm okay with.
Mm-hmm.
Now, why all this matters to our audience is
Yes.
that when yields increase, that increases the borrowing cost for companies and consumers, you and me. And that could slow down economic activity and could actually put pressure on the stock market. So the key with all this stuff actually is the bond market is where you need to pay attention to, that your fixed income. Now, the good news is for bond investors, higher yields are a good thing because you basically buy a bond that's paying now 4, 5, or 6% interest, where 3 or 4 years ago you could only get 2 or 3%. So the key here, though, is you want to have an actively managed direct bond investment portfolio. Again, this is my opinion, versus using a bond fund or other type of product, because you can go out there and we can have our portfolio manager, and this is what we do, is individually select these bonds and ladder the maturities and take advantage of some of these high yields. So while it may be stressful as citizens or a country, you can go ahead and lock in some of these yields and make sure that your money is making 4, 5, or 6% interest while all this mess gets figured out. So that's why it matters. So again, just having a direct bond portfolio, laddered maturities. Again, this is not advice. Meet with your financial planner. This is the way we do it. So this is our opinion. However, I just think that is why it matters. That's good, Cory. Thank you for doing that research. Good perspective.
You got it. Thank you.
All right, why are these all tongue twisters? But anyways, we're going to fix that.
I don't know.
Week.
I don't know.
Nestlé knocked down. That's not as bad. Nestlé knocked down. So here we go. A little drama here for you, Cory. Nestlé dismissed their CEO, Laurent Frixie. I'm probably botching that name.
Laurent Frichet. I tried to look it up, Jake, how to actually pronounce his name. Let's see if I got it right.
Laurent Frichet.
Right. I think that's it. There you go.
After just 1 year, Cory, following, here we go, a personal scandal, Philippe Navratil steps in as the new CEO. And basically this raises questions. And so basically what happened, did this guy have an affair? Didn't he have
an undisclosed romantic relationship with a subordinate?
Gosh, this just happened. This just happened with the guy during the Coldplay concert.
Yeah.
You know what's funny is that guy, him and his HR manager at the Coldplay concert, arguably brought the country together better than any other president has in the last 8 years. That's my joke for you.
Yeah, people love pouring on them.
So this guy at Nestle, what are you doing? And like you said, it was undisclosed, because I'm sure these big companies probably have, as long as you disclose it into HR and let them know what you're doing, blah, blah, blah. But who knows? Could have been an affair, and so he didn't want to disclose it. Who knows? But I have a problem with this. I get, there's no judgment here. That I get that we're all human and we all make mistakes. And so it's just tough when you're the CEO of a company. You've got to think about those things before you do them. And so leadership, for how it impacts our audience, leadership changes can create a tremendous amount of uncertainty about a company's direction. They didn't want Philip Navratil or whatever as the CEO.
Correct.
They had to put him in because this guy, Laurent, messed up and violated a major policy, it sounds like. And so leadership changes are very important. And so another reason that we don't like index funds, if you're in an index fund and it's in Nestle and you don't want to own Nestle, you're in it. There's nothing you can do about it. You're in it. Versus us, when we buy individual stocks and bonds, and again, this shows not investment advice, we can get out of Nestle, right? If we want to get out of Nestle because of this. And an index fund, you're not in there. So well, first I want to hear your opinion before we go into the next one, Cory. I want a quick commercial break, but go ahead.
I think that CEOs should stop engaging in undisclosed romantic relationships with subordinates. Yeah. I don't think it should be necessary for me to state because it's so obvious.
But what if it's an affair? What if you can't disclose it because you're having an affair? Then what are you supposed to do?
Maybe think before you do that. If you've already done it, good luck.
Yeah, why not get a divorce? I mean, if you're not happy, you need to go other routes then. Because here's the problem: if you're CEO of a company and you can't you can't follow the rules. What does that say? And again, there's no judgment here because it happens. Like I get people that are human and I don't want to act like I'm holier than thou or whatever. Like we all make mistakes. But I'm just saying, like, if you're going to lead Nestle, you need to be a leader all the way through.
Right.
Like I tell our team that like I am always a wealth advisor. Like my analogy is that if you're on an airplane and somebody's having a medical emergency, they'll ask, is there a doctor on board, right? Well, if there's a financial emergency on board of an airplane and somebody says, is there a wealth advisor here? My hand's going up. Like, what can I do? What can I help you? Like, I always am that. And you know what I also always am? I'm always a husband to my wife, right? And I'm always a son to my father. And I'm always a doggy dad to Einstein, right? But none of those, Cory, are ever turned off. None of them. I'm always those things. That's who I am. I'm always those things. And so I think if you're CEO of Nestle, little me, little Jake in Kansas City sees life this way. Like, why can't this guy?
Good question. Leadership starts at the top, right?
Well, not there. I mean, I just don't understand how. To me, it's obvious. To me, it's obvious that I try to, if more people lived their lives like they were being filmed all day, I wonder what that would change. And that may be coming.
Right.
With all these new goggles and glasses and everything. I mean,
we're well on our way.
Your life may be being recorded constantly. Then what?
Right. Think about what it is to do the right thing. Yeah, that's good.
Exactly.
That's good.
Exactly. All right, quick commercial break, Cory. I waited a little long in the show. But again, thank you to all of our audience members that are out there and tuning into Upticks. The whole point of Upticks is to enhance financial literacy. We love doing the show. If you're getting feedback for us, just simply email Luke at falconwealthadvisors.com, and Luke will make sure that feedback gets to me and Cory. Also, if you get a question or a topic for the show, please let Luke know as well. Like, subscribe, thumbs up, 5-star ratings, all the things. And you can find me out there on Instagram, Jake_Falcon_CRPC. And Cory is Cory Bittner, KC. All right, Cory, take us home with our last topic.
Fed fuels metal momentum. Got it. All right. So gold surged to a 4-month high and silver climbed to its highest level since 2011, driven by expectations of a Fed rate cut and a weaker dollar.
So why does this matter?
Precious metals can often act as a hedge against inflation and currency risk. Investors may consider gold and silver as portfolio diversifiers, especially during periods of monetary easing and market uncertainty. What do you think about?
Good disclosure, Cory. So again, you're not recommending gold and silver. So I think that gold is still one of the worst performing asset classes of all time. I think it is had a fantastic run here lately. And I think that, you should meet with your advisor to see if it makes sense in your portfolio. I think, generally speaking, I don't like gold as a buy and hold. I like it as something to trade, sell high, buy low. But again, this is not investment advice, but that's the way I see it. And frankly, I like doing that with a lot of things. But I don't like a raw asset either. I don't like a raw commodity. I would rather get exposure through like a gold miner, for example. And again, this is not advice. So for compliance, this is not. I'm not saying to buy or sell it. I'm just saying this is generally speaking. Go meet with your financial planner and talk about it. But I think if you are interested, you should look at getting a company that profits off gold and silver and something that you can rebalance and buy and sell based on price movements. That's my opinion.
Okay. Here's one for you, Jake.
All
Did you know that over the last 25 years, gold's return has been twice that of the S&P 500?
Crazy.
Over the last 25 years.
I wonder why we don't hear about that more.
That's a good question. That's a good question. And I think that, gold is surging because of uneasiness around deficits and debt around the world. And I think that if we look at the last 25 years, it's really fascinating. I think maybe, who knows, maybe what's old is new again. We've seen the price of gold move a lot higher, and we've seen the dollar move lower this year.
Do you think crypto has anything to do with that gold price or no?
Not really. I don't. The whole framing crypto as digital gold, which seemed to be a sort of talking point a few years ago. I'm glad that I don't seem to hear or read that much anymore. But I think that it's no surprise to me the environment that we're in right now, I should say, has made, we've seen the gold price surge because prices are moving. It seems like gold prices are moving higher regardless of what inflation says. We know the Fed is in all likelihood going to be cutting interest rates soon. I think that gold exposure ultimately belongs in a diversified portfolio, which is what you've already talked about here, Jake. It's not direct investment advice, but it's something we think about when we're building and constructing portfolios for our clients.
Yeah. So it's just another asset class, and it's good to be diversified. So again, this is why you shouldn't just buy the S&P 500 index fund and call it good.
Right.
Because you're probably not going to have gold exposure then. And this is also why you shouldn't just go buy gold bars though and call it good.
Also true.
So, that key here is with us as we diversify, we directly buy individual stocks and bonds. We trade options for approved clients. And the key here, Cory, is we buy and sell.
Right.
We rebalance.
Yes.
Because I think that's where people get it wrong. I think that's where advisors get it wrong, actually. I see a lot of portfolios come in here and they probably haven't been rebalanced by advisors. They're just too passive. And what irks me is these people are paying these advisors, thousands and thousands and thousands of dollars, and the advisor's not doing anything.
That's right.
So I'm not saying that you need to day trade and micromanage your investment portfolio, but if something's really high and something else is really low and you still like both of them, you might consider selling the high one and buying the low one. You might. This is not advice, but you might consider that. So that's the whole point of that. Good, Cory. Good show. Sorry, I had to knock you off the soapbox today, Cory. I didn't want you to get preachy. I want to have I want to go back and forth.
That's good.
With you. I want to have a conversation. So anything new you want to share with any other recommendations or new things that you run across?
Recently I've just had a lot going on, Jake. I wanted to share though, I had a great opportunity. I actually took a few guys from our team, played in a wiffle ball tournament last week for an organization.
For charity, right?
Yeah, that is near and dear to my heart. The organization is called The Battle Within. And a fraternity brother of mine who's a combat veteran is the clinical manager for the organization. And ultimately what they do is for first responders, for combat vets returning home, basically to deal with the trauma that people have dealt with.
That's awesome.
To be able to move on, and move on with their lives and functioning properly in society. But this tournament is really neat, Jake. I've played in it for 4 or 5 years and they've raised over $3 million now playing wiffle ball.
Wow. Did you guys win?
Yeah, we won. In fact, we dominated. And 2 people on our team, shout out to both of them. Joe Roast was the aces all around, which is no surprise. Joe was.
What's that mean?
He was striking out. He actually struck out a few people on his own team because you're pitching to your own team. But but he also had an opportunity where you can erase points that the other team scored by throwing the right pitch. So Joe is a college pitcher, which came in handy. And then Tyler on our team also, Jake, Tyler Guyman was the MVW, most valuable whiffler. He made a few behind the back plays like Bobby Witt playing shortstop. Looked pretty good out there. But we had a good time. Did
anybody go yard? Did anybody go yard on your team? Did you hit a home run?
Nope. I was robbed. I was robbed of one, actually. The guy made a great catch. I was very close. But Joe and Tyler actually were our competitors for the home run derby against the other team too. And they hit twice as many home runs as the other team.
Wow. Domination. I like
That's right.
Cory.
Yeah. So we've got we've got some gamers on the team here, which is good.
Good for you to bring in some ringers and just win a wiffle ball tournament.
That's right.
Cory.
Brought us some clients.
You just go and steamroll everybody. It's supposed to be fun.
Had some clients, had some teammates, had some veterans from the Battle Within who played with us. We had a great squad. It was a lot of fun. I think this is the 4th or 5th year. It's a lot of fun and a great organization to support.
Good for you. Good for you. Yeah, not much with me. Football season's here, so I'm excited to watch the Chiefs and my Huskers and my Roadrunners. So I got a lot to root for there.
Yeah.
For those that don't know, I used to live in Nebraska at a very young age, so I became a Husker fan early on, and I still love watching the Huskers and rooting them on. And I graduated from UT San Antonio, so the Roadrunners are fun to watch when they're on TV also, and then, of course, the Chiefs. But just doing that. Our patio is grinding along, but they've really kicked it up this week, Cory, so stay tuned. I'm going to post some pictures out there on social media once that's finished, and I'm excited because my wife really likes the outdoors, and she likes fall, and that's where we're at. So
it's in time.
We'll be doing some staycations at our house, probably having a little bit of parties, so stay tuned on that also. I'm planning to have some house parties. But that's new with us. So thank you, Cory, as always, for joining me. And thank you all for tuning in. We hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website at www.falconwealthadvisors.com and click the Contact Us button if you'd like to meet with Jake and his team.